Hello, this is Surya Saha, the author of The Digital Choices, and you're listening to the Insurtech Story podcast, the platform to spread knowledge on insurance innovation, digital disruption, and entrepreneurship. Our website, insurtechstory.com, and we are available on Spotify, Apple, and Google. Welcome to today's show, where we will discuss on the topic how Insurtech can close the protection gap in emerging markets. And for now, I'm delighted to welcome our guest, Susan Holiday, who is an advisor to the International Finance Corporation, IFC, and the World Bank, where she focuses on Insurtech and insurance for SMEs and women. She has served on insurance sector boards in UK, Brazil, and India, and is currently a board member of Tribal Planet, a Silicon Valley tech company, and an advisor to EOS Venture Fund and to several startups, to name a few. She has worked across life, health, property and casualty insurance and reinsurance at both global and regional levels and led strategy for emerging markets and fintech. Prior to joining IFC, she was a managing director at Swiss Re, serving as head of strategy for Swiss Re's global reinsurance business, and before this, CFO of reinsurance client markets and group head of investor relations. So these are pretty much a broad level of how she has contributed to the insurance sector globally. Before Swiss Re, she was in equity research and equity sales, covering the insurance industry at UBS, JP Morgan, and Paribas. She started her career as a chartered accountant with Deloitte in London and then established a counterparty credit analysis department for an insurance broker. Ms. Holiday is a member of the Chartered Institute for Securities and Investment in the UK. She graduated from Magdalen College, Oxford, with a degree in modern history and completed Harvard Business School's Advanced Management and Women on Boards program. So, Susan, welcome on board, and I'm truly excited to have you for the show.
Thank you for the very kind introduction.
Welcome, Susan. I would like to start by saying emerging consumers present a promising market for insurance, and creative insurance companies have been developing promising models to reach this market for years. Since the 1990s, the microinsurance movement has demonstrated the benefits of insurance for low income people, as well as exploring new business models to serve these customers profitably in frontier and emerging markets. Microinsurance, if we look at, the pioneers as well as social insurance programs targeted customers in the informal economy who were underserved by mainstream commercial insurance. Now, microinsurance models matched their premiums and benefits to the needs of these groups. Today, inclusive insurance expands this market and product development work to all those who have not been served by traditional insurance, including the lower middle class, while retaining a particular emphasis on vulnerable and low income population. So with this, let me move on to ask, you have extensively worked and have also published an article on how Insurtech can close the protection gap in emerging markets. So basis this, could you tell what according to you is inclusive insurance and why it matters in today's world?
Okay, so thank you for the question, and let's maybe try to unpack it a little bit. So the first I would, and people often don't realize this, is that the protection gap is there. And in fact, it's not only an issue for emerging markets or for low income people. So to take as an example a story about me, and this is when I worked for Swiss Re, as you explained earlier, and I was saying, oh, I don't have a protection gap. In fact, I have too much insurance that I don't need, because when I was at Swiss Re, they made all the employees have life insurance, and I don't have any children, and I'd paid back my mortgage, so I didn't actually need life insurance. And it was true that I didn't need life insurance, but the person I was talking to said to Granny when I was growing up and this kind of thing. And so she said, that's good. Do you have long-term care insurance? And I said, no. So she said, okay, you have protection gap. So I'm like, yeah, you're right. So one of the problems actually is that all over the place, including for things like San Francisco earthquake and so on, there is a massive protection gap. Now, it's true that it's greater in some countries where there's not been a culture of insurance. Perhaps there hasn't been so much compulsory insurance. People don't understand it, perhaps they can't afford it, and all this kind of thing. So I think when we're talking about inclusive, it really means that insurance has to be, and I use kind of three things beginning with A. So the first one is accessible. In other words, you have to relatively easily be able to buy it, right? And it shouldn't be a ridiculously complicated procedure. Second thing is affordable, because you've got to be able to pay the premiums, and people still need to be able to eat and look after their house, and send their kids to school and whatever it is, right? And then the third thing is appropriate, because one of the problems I think with the insurance industry is it's a very old industry. It has an interesting history going back hundreds of years. I'm from England, I'm from London. So one of the places where the insurance industry was kind of founded with Lloyd's of London. But in many cases, the products and the policies that were developed 50 or 100 years ago are not necessarily relevant to the lives of consumers, small businesses, you mentioned informal sector, gig economy, etc., today. So to go back to the question, for me, it's not only about kind of income levels, if you like, it's about making insurance relevant to the risks that people and small businesses are facing in different countries, and how do you get it to them, and how does it deliver value for money to them. And I think this is what the industry's kind of got to work on.
No, absolutely. That's a very true point that you have raised there, particularly for the young generations as we are moving ahead. The relevance and how we actually access and perceive insurance as a product is absolutely important in comparatively, how it was being traditionally served. So that's a very
Definitely,
yeah.
and I think this is an important point. I mean, the company I serve on the board of, although nothing to do with insurance, is very much focused on millennials and Gen Z, and people of my generation, certainly in the UK, and we kind of grew up having insurance, and for most people, the first insurance they had was motor. Or maybe it was some kind of household contents or renters insurance or whatever, and that's how you got into it. It's interesting that in a lot of developing countries, people's first encounter with insurance is very often health or life, rather than on the property or casualty side, which we can come back to later. But you're right, lifestyles have changed, right? Everything is kind of much more digital. People are not staying in the same job for 20 years. People are not necessarily just kind of doing what their parents did. In countries where there's not much culture of insurance, where maybe the parents don't have insurance or don't have a car or anything like that, where they have to buy insurance, it is definitely important that the industry approaches the next generation of consumers in a different way.
Absolutely. I think that's where the Insurtech has a major role to play, and how they're actually aiming to compete with the incumbents there. That's fantastic. Susan, just moving on to our next discussion points. The insurance industry, as we have discussed, as compared to the traditional way of functioning, is responding to the market opportunity today in a very significant way. According to the Insurance Information Institute in 2005, only 7 of the major insurance players were involved in microinsurance. In 2011, there were 33, and by 2016, 60 major insurers, including AIG, Allianz, AXA, MetLife, and Zurich, were active in microinsurance. So, how do you see the industry moving toward this new equilibrium? And especially when we have discussed how the young generation or the millennials are perceiving and looking to access insurance as a product.
Sure. Well, I think there's a few things going on here. So
Yeah.
the good news and the reason why I'm so keen on Insurtech and the premise behind the article that you referred to earlier is that using new technologies, which are pretty much new since 2005, right? You can actually make insurance more simple, more affordable, and for people in a way that just wasn't possible before, when things were very kind of manual and processes took a long time and you didn't have the ability to upload photos from your mobile phone, just for example, right? And you didn't have so many like biometric IDs and all this kind of thing. So the challenge with mass market, let alone lower insurance for lower income people, micro, whatever you want to call it, is that the margins are very small because we're talking about small ticket policies where the premiums are small, and so you have to have a lot of volume to make any money and to cover the fixed costs. And that's where, first of all, technology comes in, and also why I think the most successful is when the policies are relevant to really a large proportion of the population. So that's why I would count kind of mass market, middle income, whatever you want to say, people, along with the kind of lower income population, because the more consumers that you have for which the insurance is relevant, the more you have really a sustainable business model. So I think the first thing is that this type of business has only become viable for commercial entities really once kind of new technologies came into the picture. There is also something else going on, which is that some countries have launched these kind of micro insurance licenses. And this may be partly where they're picking some of the data up from. Now, this doesn't necessarily mean that the company wasn't doing anything before, but the advantage of these is that normally the capital requirements are lower. And in some cases, the regulations are kind of less onerous. On the other hand, it can be a bit misleading, if I can put it like that, whether a company has a micro insurance license or it doesn't depends a bit on its business model, especially if it's part of a large group, right, which will already be licensed to do all those kinds of policies. And as always, there's kind of a tension between making things cheap and indeed simple and protecting the consumer. And this is a topic, as you know, in financial services, which comes up again and again and again. And I don't think there's any perfect answer. And, you see it between kind of regulators trying to protect people by having long explanations required, having cooling off periods, things like that, right? Which in some ways is a good idea, but on the bad side, you can have, pages and pages of kind of boring stuff that nobody reads and nobody understands. It costs a lot of money. You have people buying things and canceling all over the place, and all this maybe even leads to some misselling. So it is, that side of it is quite tricky. But in conclusion, I think that companies have realized that, as I say, there is a huge protection gap and they need to appeal to segments of the population who have been underserved by insurance. But in some cases, the jury is still out as to how successful it's going to be. That there have been a lot of companies launching micro insurance products a few years ago with telcos and all this kind of thing, and they sounded kind of really cool, but they weren't necessarily, the business model was not necessarily sustainable. So we also have to be careful that people are not kind of like launching all these things, but they never get anywhere and they never really do anything to close the protection gap.
No, absolutely. As we are moving towards new ways of looking at insurance, and very interestingly how micro insurance is shaping the product offerings both in the PNC and the life insurance part, with 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 the accessibility on how any customers can purchase an insurance as per his or her need, even for small aspects or small amount, even while running on a treadmill, or even for a watch a person wears, or even for a small travel insurance, where we are increasingly seeing new applications of the blockchain and other stuff. So I think, as you rightly mentioned, the protection gap is bound to reduce more as we as we innovate with the need recognition part and the accessibility part, on how the young generation is actually looking at insurance for only the purpose they are looking at, not as looking at as an investment tool or such things like that, which is very much prominent in the South Asian region.
Well, it's interesting that you mention that, because funnily enough, and this can be a bit confusing, so I'm glad we get to cover it. People tend to use the term micro in two different ways that don't mean the same thing. So the way that I use it is kind of, insurance for lower income people. Sometimes people call it bottom of the pyramid. I think that is also a little bit misleading, because at the very bottom of the pyramid, you should not be buying insurance, because you need to, buy basic things like food and clothes and so on, right? So in the hierarchy of needs, I think insurance comes in once you start borrowing money or starting a little business or something, but it's not the first thing that you should buy. But the term micro is also used to cover what I call bite-size insurance, which you refer to, and that, I think that's great. Because I agree with you, young people in particular are not used to buying an insurance policy for a year because that's what their parents did or whatever. They want it for a short period of time, for one item, this type of thing. They maybe want it turned on and off automatically. And I do think that's a way that you can get people kind of involved with the insurance industry, and they start to see the benefits. And then maybe as their lives become more complicated, as they get older and so on, then they will, buy other products as well. And as you mentioned, that definitely all needs to be tech enabled. So it's also called insurance on demand. So I tend to call that one bite-sized insurance on demand. Call the other one micro.
Right. No, absolutely. That would be more appropriate for this. So Susan, in your article, you have categorically spoken about the opportunities in developing countries, and I quote from there: the penetration of insurance in developing countries is generally much lower than in advanced economies. Typically, the insurance industry takes off when GDP per capita reaches, for example, $5,000. So, as per your observations, how do you see insurance or Insurtech playing a major role in the economic development and prosperity of a country or a region, for that instance?
Thank you. So I think obviously this is the famous S-curve, right? Made famous by Swiss Re Sigma research. And but a couple of things. The first one we've already covered. I mean, people are not going to buy insurance until they have a certain amount of money and a certain amount of things to protect. But there are also some anomalies. There are some countries where you would expect the insurance market to have taken off more. Nigeria is an example that springs to mind for me, where there's quite a lot of fintech kind of going on, but not so much in the insurance space. And a lot of the times in those cases, I think it is kind of a cultural thing. And the industry needs to come with a new approach and new products and new ways of selling them, rather than just kind of like, beating a dead horse, as it were, with trying to sell, the kind of the old-fashioned products in the old-fashioned way. So to answer your question, for me, insurance is all about resilience. It's about being able to, for people, for families, for small businesses, whether they're formal or informal, being able to keep going, to put it bluntly, when something bad happens. Something bad could mean somebody getting ill or even dying. It could mean a flood, a fire. Let's think about kind of modern industries. It could mean a cyber attack. Right, which is a kind of a risk for a lot of small businesses that they don't necessarily really recognize and do anything about. So if we can increase the penetration of insurance, as I say, it should make societies more resilient. It should help to stop people falling below the poverty line. And it should also reduce the kind of need to fall back, to the extent there are any, on kind of state welfare systems, right? So I think it's extremely important to economic development. And one example, very recent, that's interesting, is that during COVID, which is still going on, there were a lot more inquiries about health insurance, and particularly from small businesses. And as you know, typically group health policies, well, started off, you had to have kind of 50 or 100 employees. Then it kind of got down to about 20. But for smaller companies and organizations, there was hardly anything. And in the last few years, we've seen some examples, and IFC has worked with some of the companies where they've managed to offer health insurance starting with 5 employees, and in some cases could be extended to their families, and so on. And there's been a great deal of interest in this, and it's kind of been something that people were sort of looking to have as part of their jobs. And I think it's going to be interesting as things kind of picking up, hopefully a little bit now with the economy. Is this a way to attract and retain workers? And obviously it's good for the companies as well, because if people are protected, first of all, they're not going to come to work when they're ill, but also hopefully they can get back on their feet more quickly and come back in good shape. So I think that's a real live example of how it can help the economies. And I hope, and we do some work on this obviously at the World Bank, but that governments and regulators, and when people are making policy decisions, that they don't forget about insurance, because it's very easy to think that financial services is banking and payments, right, and also the capital markets, and to forget about insurance. And I think that's a big mistake. So one of the things that we're always lobbying for example, through the SME Finance Forum, is don't forget about insurance. You might not think about it when you think about financing, but it has an important role to play.
No, absolutely. You have rightly pointed out on the COVID situation that we all are facing across the globe. The pandemic have significantly widened the protection gap in emerging Asia, especially where the prevalence of underinsurance and non-insurance exists across various different risk categories, from property to health and mortality, specifically extending to include longevity and liability. Do you think the emergence of Insurtech and large number of VC fundings that we are witnessing over innovative Insurtech, for innovative Insurtech startups can deal with the low insurance penetration, especially when we see it from the viewpoint of lack of accessibility, of affordability, and of course awareness?
Yeah, so one of the challenges at the moment is that a lot of the most funded Insurtech startups, and arguably impressive ones such as Lemonade and Next Insurance, to name a couple, are currently not operating in emerging markets. Now, maybe they will at some point, or maybe they'll do some kind of agreement with somebody to set up, a similar company in Asia or in other parts of the world that you are referring to. But I do believe that with some adaptation, but actually not so much for these new models, they are applicable to emerging markets, and a lot of the tech work has been done, right? So it's not so difficult to kind of launch and and get to a break-even point. One of the things that's been interesting about the COVID situation, and which we kind of touched on earlier, is that obviously there's been a lot of interest in health insurance. Health insurance, as you know, is a tricky line of business where traditionally it has been very hard for companies to make money, especially in emerging markets, because there was potentially a lot of fraud. The costs of the doctors and hospitals and so on were a bit out of control, or in some cases you had the opposite problem, that there weren't enough doctors and hospitals, so there was kind of no point having insurance if you couldn't get care anyway. And it's still a tricky line of business, but they're, as I say, using technology, and for example, greater use of telemedicine, greater use of, being able to do things on your phone, self-service type models and so on, does hold out some interesting opportunities. But the other line of business that I heard from a broker I know in India who specialized in SMEs that people were inquiring a lot about was business interruption. And as you know, business interruption in most cases would not, COVID would not trigger a business interruption policy because it doesn't meet the criteria. So there was a kind of lack of understanding of what the policies were actually about. Now, if I'm in an optimistic mood, I'm like, okay, great, but these folks are contacting a broker or an insurer or whoever. And so maybe they can explain to them, well, look, business interruption is not what you need, but guess what? You really need, property cover and cyber or whatever it is, right? Along with health. If I'm in a less good mood, I'm like, oh, this is another, the whole business interruption thing was a bit of an own goal for the insurance industry, right? Because it got a lot of bad publicity, even though really in most cases it was not covered. And I mean, you can't just pay claims for things where no one's paid a premium. And so it is tricky. So I think the point coming out of all this is that there is a need for there's a need for education and understanding for the consumers and the small businesses. But there's also a need for the insurance industry to step back and say, okay, what are the risks that these groups are really facing? And do we have any products that can help with those, right? Rather than just, here's a product and you should buy it, even if it doesn't really make any sense for you. Just to give an example that I was looking at for some work I'm doing with the World Bank, was a cover for people involved in the fishing industry, and it had two parts to it. One was kind of like a nat cat cover, so if there's a huge natural disaster and you can't fish at all and probably can't go outside and maybe your house fell down and all the rest of it. But it also had another aspect to the cover which was based on tides and basically more like a sort of interruption to your normal daily or weekly business, but not something kind of catastrophic that would be on the international news. And they started off really focusing on, as I say, kind of like nat cats. But when they talked to the people in the fishing industry, which incidentally, I was going to say fishermen, but a lot of them are actually women, so I'm being very careful about that. About what their needs were, a lot of it was kind of, if you like, income smoothing, right? If they had a few days when it was impossible to fish, but not linked to a natural disaster. So for me, this is quite a new policy. Let's see how it goes. But for me, it's starting with what are the needs of the customers, right? And then looking at, okay, well, what can the insurance industry, in a sustainable, profitable way, offer to deal with these? Where I think the industry has been pretty bad, to be honest, over several hundred years, is they always started with a product. They designed a product and it's kind of like, you should buy this product. And there, as we talked about earlier, for young people, for people in certain parts of the world, these products don't make any sense. So it's not actually that the person's being stupid by not buying it. They're actually being totally rational by not buying it.
No, absolutely. You mentioned about the business interruption product category. So I think, there's a more significant role that underwriters needs to play in actually address the pressing issues that this particular interruption category is facing with all the policy documentation and the risk that comes along with it.
Well, so there were already some pandemic kind of policies around. And in the beginning, they were criticized because the pandemic had to be in more than one country, if I remember correctly. And people were like, this is too strict. But it turned out it wasn't, because COVID's in like every country. But the problem there has been that it's very complicated and has taken a very long time to pay out. The other problem from the point of view of the insurance industry is that if it's really a global pandemic, is not a diversifying risk. It's quite the opposite, right? And those potentially correlated with stock markets being bad, changes in interest rates and all the rest of it. So it's kind of like a bit the opposite of what you want to have. So that is still quite tricky. And the other thing is that it's quite I don't even know what the right word is, but a little bit political, because, what's the trigger going to be, right? Is it the World Health Organization saying something? Is it a government? What constitutes quote unquote lockdown and all this kind of thing?
Right.
So I'm not saying it's easy, but I agree with you. There needs to be some more focus on this kind of thing. I mean, the other way that it would be possible to come at it potentially, and you mentioned earlier on about savings and so on, but it is possible to have pensions and savings type policies that you can draw on a certain number of times, right?
Yep.
And that may be a way to go as well, right? That either that gets triggered or it's your choice. Within a 10-year or 20-year period, you can draw some of it out a couple of times or something. Now that relies a lot on kind of like government policy and tax policy and all the rest of it. But I think there are ways to address it. We're still, a bit in the eye of the storm, right? But it does show that if we're really focusing on, protection and resiliency and inclusion and all the rest of it, that, these issues need to be addressed. And probably governments don't just want to have to do these like huge payouts to everybody kind of randomly over and over again. So I hope they're kind of motivated to work with the industry in this area.
No, absolutely. Things needs to go hand in hand, and of course there are work going on from the regulatory part, but there are rooms and to improve more, and the pace should be more faster than how it is at present. Susan, just with the interest of time, just a quick thing I would like to include here, which is a very interesting part that you have included in your article, um, on the areas of insurtech innovations that included fully digital insurance companies, online brokers and advisors, aggregators and platforms, process improvers, data analytics, and others. So I'm very much, very keen to know a bit more on what you would say on the process improvers in all the areas of insurtech innovations you have captured there. Just a one liner, if you could just explain for our listeners, what would you like to indicate?
Sure. So obviously you've picked the biggest category, the one that's the least obvious to ask about, which makes sense. So to give a couple of examples, first of all, there are companies just focusing on one part of the value chain, such as claims, right? And Snapsheet would be an example there. So they're working with the insurance industry to improve their claims process. And one thing I should mention, because I think this is a bit different from some of what's going on in banking and payments and so on. In Insurtech, in a lot of cases, the Insurtechs, the startups, whatever you want to call them, are actually working in a certain way with the incumbents and with the industry. Sometimes it's really obvious in this case, if you're working with an insurance company to improve its claims process. But in other cases, it may not be so obvious. But if you think about some of the startups that we mentioned earlier, they have investors who are insurers and reinsurers. They have reinsurance support, right, for their balance sheets. So it's not, I don't see Insurtech as necessarily being completely new companies coming in and taking over the industry. The other area that we can use as an example is data analytics. There's a lot going on in this space where companies are working again with insurers or with brokers to get data from alternative sources and to analyze it from the point of view of underwriting, claims, risk management. So those would be two examples.
Right. No, I mean this article which you have published in 2019 August, how Insurtech can close the protection gap in emerging markets. It's one of the very significant ones that I've come across, and I would like to refer the same to all the listeners, that this article you must go through, and this is of course available in open source. And it's free of cost to download. It's a fantastic piece written by Susan Holiday, and she has captured a very important points and categorically have mentioned how the insurtech space would actually play a critical role in the protection gap scenarios in emerging markets, and especially when emerging markets has to play a vital role in the global economic development. Um, thank you, Susan. It was a fantastic discussion, and thank you for sharing your thoughts there. It was truly a delight to have you as our guest. And lastly,
thank you so much, and look forward to continuing the discussion.
Absolutely. And lastly, to wrap this up, thank you for listening, and see you at our next episode. Take care and stay safe. Goodbye for now.